Good morning once again, and welcome to the Haven Financial Group radio show. Thanks for listening. Feel free to give us a call if there's anything that resonates, if you have questions, worries, concerns, reservations, anything whatsoever. That's why we're here. 612-504-8400 or havenfinancialgroup.com. Visit us online. I mentioned earlier in the show the variety of classes. One that's very applicable, as I mentioned, to Minnesota, how to keep the cabin and the peace in the family, especially in the land of 10,000 lakes here. It's March 26th here at the Education Center. Carrie Renner, our estate planning attorney partner, will be putting that on. And then Medicare Made Simple classes, investment classes, maximize Social Security tax, a variety of classes, and other classes that we do at the Education Center that you don't always see from other places, like fraud prevention for seniors, state of the economy. Kyle and Greg on the investment team just did a state of the economy. It was wonderful. It was interactive. The classes pretty much are always full with waiting lists. So I encourage, whether you're a client of ours or not, or you heard us on the radio, whatever it is, you're invited. And there are no costs for any of our educational classes.
Sounds fantastic, and I hope that people will definitely go to the website and take a look at those dates. They do fill pretty quickly, folks, so be sure that you check it out. Today we've been talking about some of the world events that have had such an impact on our economy here in the United States, ultimately having an impact on your personal finances. We want to wrap things up today by talking a little bit about structuring your finances when it comes to a volatile stock market. Kyle, I want to start with you. I know that you guys talk a lot about the idea that when you're in retirement, your goal shouldn't necessarily be to make money, but really a lot of your goal should be to try not to lose money. So this volatile market certainly is a time when a lot of retirees should be considering how much risk they're taking, right?
Absolutely. Yeah. We want to assess that risk level on an annual basis with people. Just make sure that it still aligns with what their goals are and what their comfort level is. But you're absolutely correct in that our first priority in retirement is not actually to make money. It's to make sure that we protect it, especially in moments of downturns. The market this year is actually negative slightly. But I was just looking at this yesterday with one of our clients, Doug, and his stock portion of the portfolio is actually positive. So, he's well rebalanced, and the portfolio is diversified. And so just making sure that you have the proper diversification can really help in times like this. And actually, I was also telling him, it may not be comfortable for you to see this volatility in the market, but it actually provides a good opportunity for us because we do have the accounts properly diversified. And when we have that, it allows us to effectively rebalance and buy low and sell high in all these different categories that are moving around, and they move around in different ways on any given day. So we don't know how it's going to act, but when we have a disciplined process for it, having that volatility can actually benefit you.
Kim, if I could add to what you said, making money, of course, our clients want them to make money, of course. But you said, maybe safety should be more, as you get older, take the foot off the gas pedal a little bit. Safety may be more important, protecting some of what you worked hard for. At Haven Financial Group, and Kyle can attest, and the Haven investment team, we're not against the market. Okay, we like the stock market. We manage, and we're not small at all. We manage with Fidelity Investments or Charles Schwab, two great platforms. We have everything on the menu to choose from. But we want folks to be more aware of what they're doing, aware of how much risk they're taking, and have some sort of understanding, because the problem is a lot of people don't have a clue as to how much risk they're taking until now, when the market's really volatile. Oh my goodness, I can't believe I've lost this much money. How is that even possible? Well, their portfolio hasn't changed. They just haven't paid any attention. So there's no awareness, which when you get closer to retirement, you want to, those accumulation days are behind you. Now it's preservation, distribution, and you don't want to be taking money out when the market's going down. So it's why we preach, and really do, having good liquidity. So you have options, maybe that you have maybe a brokerage account, that you have Roth accounts, that you have maybe IRA pre-tax accounts. The more that we're dealing with, and doesn't necessarily more the money that we're dealing with, the more of the variety of accounts, the more options it gives the team when for when the markets are up or down. So liquidity is important. So again, an awareness and an understanding, because if we have a chart that we show at one of our classes, that sequence of returns risk, you retire, the markets are up for several years, and then later in life they're down, is a way different result than if you retire and then for the first several years the markets are down and then they're up.
Mm-hmm.
That chart looks way different from one to the other. So
Sure.
it is real.
Yeah. I think what I also hear you saying here is diversification, diversification, diversification. And that can be somewhat confusing for an individual to try to diversify their portfolio on their own.
Very much so. That's what they pay us and the investment team to do, to manage that diversification, to come up with the portfolios, to rebalance with this volatility. That's rebalancing opportunities.
Mm-hmm.
And I want to also add to what I said. It's not for us, nor it should be anybody, to tell people they have to have risk.
Mm-hmm.
Okay, we have clients that are well prepared or in retirement that have no risk in their portfolio at all, because that's their comfort level. It's not for us to tell them where they're making a mistake, because you know what? They're going to be just fine putting it in a bank account at 4%.
Right.
But we have others that are fine with the risk of the market. So it's, what's your comfort spot? What's your comfort level? And stick to it, and don't make any of these knee-jerk reactions that unfortunately a lot of investors do.
Yeah, absolutely. Kyle, I would imagine, though, you do have some people who come in and they watch a market like we've had in the last, 3 or 4 years, and they just cannot stand on the sidelines. They can't take it.
Yeah. And there are some people who did get onto the sidelines before the last few years, and they're trying to figure out a way to get back in.
Sure.
And that's the whole thing about trying to time the market is you don't have to be right once, by getting out or whatever. You have to be right twice. You have to be right the first time on getting out, and then you have to be right the second time on getting back in. Mm-hmm. And that's such a hard thing for people who are on the sidelines, because yes, they want to be in, but they also don't want to be in because now they're buying it at 25% higher than when they got out. Sure. So you just have to be really careful about that, and just know that it's impossible to consistently time the market. If I knew how to do it, or if anyone knew how to do it, they certainly won't be sitting here doing this.
Right.
But
we'd all be in the Caribbean, wouldn't we?
Yeah, we'd all be in the Caribbean. So, we just have to make sure that we stay invested with whatever that risk profile is, because that's what drives us. We want to make sure that it is a profile for us that works long term, no matter what is happening, because then we work within those parameters.
Gentlemen, it's about that time. Kyle, let's end with you. What do you want people to take away here? These geopolitical issues going on, times are a little rocky. What do you hope people take away from this conversation today?
I would say don't watch the news, but also watch the news, right? I mean, it's good to know what's going on in the world, but just tune out the noise as much as you've probably heard that throughout your lifetime. Just tune out the noise and make sure that you have a solid plan. If you don't have a plan with a financial advisor, make sure you get one, because that plan would make you handle things like this correctly.
Mm-hmm. Larry?
Well, it's the foundation to Haven Financial Group is putting a plan in place. The retirement puzzle. Do you have an estate plan, a will or trust? Very important. Long-term care life insurance. It's a big focus. I would say get it reviewed, because people are oftentimes finding out what they have isn't what they thought or they think they have. We want to avoid negative surprises. If you're to the age of Medicare or health care, bridging the gap, either in the private market or supplements or Advantage, Glennon and Isabella, we help hundreds and hundreds, if not thousands of people in this area. The wealth management we talked about today. We're not small. We manage, but we see things through the lens of retirement planning, where the element of time comes into play more than ever. For the listeners that are 20 and 30, hey, contribute to what you got, but having risk in the market, your timeline's much longer than those that are on the cusp of retirement.
Right.
These are the conversations we have, and these are the areas where we really get to help people and partner with them and give them as much peace of mind as we possibly can give them. And that's our duty, and that's what they're paying us for.
612-504-8400. Are you looking for a partner? Give the folks at Haven Financial Group a call. Tell them you heard us here on the radio. You'd like to come in. Free consultation. Sit down and chat with the experts there. Tell them what your goals are in retirement. Or if you already have a portfolio, then maybe it's time for that to be reviewed by a second set of eyes. Again, that number is 612-504-8400. Gentlemen, great show today. Thanks so very much.
Thank you, Kim. We'll see you next week.
Thank you.